GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for Institutional Advisors. Welcome back to the show, Bob.
Yeah, Jim, good to be with you.
Looks like the markets have made a big rebound after the initial shock from the Brexit vote.
Yeah, well, that was interesting because, the markets got overbought. And that was after the disastrous January. And then we're just kind of quietly rolling over. And then the market didn't really anticipate. As a matter of fact, it rallied a couple of days going into Brexit because everybody thought that it would be turned down, that the Remainers would win. And as we all know, the Leavers, the exit people, won the vote, and it's put in a tremendous change in British politics. And I see that they've ended up with a very strong leader now with Theresa May. And one of the headlines this morning is that they're canceling one of the Department of Environmental global warming things. So it'll be folded into more of an industrial ministry, which is very exciting to see. And so anyways, they, like with the Brexit collapse that Friday and the following Monday, like on one day, Deutsche Bank in Germany, one of their big banks, or we could say formerly big bank, fell 20% in one day. So this was really get me out of here kind of action. And so then it stabilized on the Monday down, and then stabilized, and then it recovered. So that decline actually was within our technical perspective. And so the senior indexes, like the Standard & Poor's 500, really jumped. So did the Dow. Now, these are certain quality stocks in those indexes, the senior quality stocks, and we know that the central bankers are buying stocks. And this particular move was interesting because through the period, there's been tremendous outflow of people selling equity funds. And it was the kind of selling that you normally get with a sharply declining stock market. But then further data came out that the central banks were buying a lot of stocks, so it was obviously enough. And so the S&P 500 and the Dow rallied up and continued to new highs. Some of our indicator stocks, like the transports, which in May a year ago did not confirm what was happening with the Dow, and it gave a signal that said the bull market was over. So that was a good indicator group. The other ones that were that led on the way down were the financial stocks, like the banks, BKX, and the broker-dealers, XBD. Now, they have recovered, but and quite smartly, but nowhere near the highs. So you can see what you have here is central banks buying the stock market. So not so long ago, they were buying the bond market so that it would lift asset prices, and that their theory has been it would stimulate the economy. And then you had a couple of sharp sell-offs over in the general stock market. So they've gone over not only just buying bonds, but buying stocks directly, particularly the Bank of Japan, and also the European Central Bank. Well, this really is some sort of delusion. And they've got to try and make things look good, and their standard recipe in making the economy look good was just to provide liquidity. And that is not making the economy look good. It's steady, that's one thing can be said, but you look at some series like car sales have weakened a lot. Industrial production, 10 months in a row of a declining industrial production number, and it's now gone negative, so you only see this kind of decline in industrial production within a recession, so who knows. And delinquencies are rising, so it's not a pretty picture underneath, but you have headlines on the Dow and the S&P making new highs. So what you have here is the PE multiple is up to 25, which is exceptionally high. And then this is driving the S&P index up to the upper right-hand corner of the chart, and you've got central bankers buying it. So it really is reckless behavior. And they're buying it not as an investor. They're buying it with ulterior motives, that they think that driving stock prices up is really going to fix things. And of course, everybody's on board. Corporate management is completely distorted to rising stock prices, and in order to make earnings look better, which they are not good in aggregate, but if you buy enough stock out of the market and reduce the number of shares outstanding, you can make your earnings look better than otherwise. It's financial mania, all right. And so this also is helping out some of the commodity sectors. You've had lumber got revived and back at the high of a couple of months ago. Base metal prices themselves have another leg up to the high of a couple of months ago. Crude oil, now that one was very good. That rally went from 26 to 51, checked back on a correction, it was so strong, and down to the 44 level, and now it's recovering a little. So we were calling for that correction, and so our view now is that perhaps some of these industrial commodities, which would include lumber, might continue to rally, perhaps into August, but it's sort of a relief rebound rally, and I don't think there's much in the way of business activity around the world to say that you're into a new cycle for base metals, for example, or, for example, with crude oil. I mean, there's a lot of it around. You've got tankerfuls of it circulating out at sea. And so I think that technically this strength, which was understandable after the degree of the crash down into January, it wasn't a crash, just heavy pressures, actually it was quite a panicky start to the year. The rebound, and then full-fledged panic in Europe on the Brexit thing. So the changes in England, I think, are very constructive. I think England is wise to leave, because if you look back in Europe's history, just back to the Roman Empire, and every experiment in authoritarian government, and believe me, there's been too many, but every experiment in authoritarian government has ended up with state murder. They intrude so much on private life, rules, regulations, screws the economy, and then they got to back up their ideas. Like, for example, when Rome came within brought in price and wage controls, they had it backed up by the sword, and people were executed for economically criminal activities. And then, of course, in the 1500s, a tremendous experiment in authoritarian government, lots of state murder with that one. Then, of course, you got more recently with the international socialists, otherwise known as communists, and national socialists, otherwise known as fascists, both bad. And here you had the irony of, in between we had Napoleon and the French Revolution and that one. And you had England, let's just discuss from Napoleonic times, expending huge amounts of blood and treasure to end nasty experiments in Europe in authoritarian government. So then with this European community, which was a great idea if they had a simply declared free trade all around, but then it got into a managed free trade. And when you got management, you got bureaucrats, and when you got bureaucrats, they'll expand just like a expanding dough. Until you have this unelected, unaccountable, bureaucratic blob in Brussels, and it with tremendous irony, taking over the sovereignty of England. And sure, there might have been votes about immigration, but the essential thing has been the sanctity of their parliament. I mean, it's the mother of all parliaments. So I think it's very exciting, very interesting, and I think their leader, Theresa May, is going to be the best one for doing the job, and we live in exciting times.
We have some questions for Bob from some of our listeners, and we'll answer those questions right after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Bob Hoye. The questions for Bob Hoye. Chris Barsky writes to us asking, the worldwide central bankers cabal is well on its way to destruction of the world financial system with its deranged negative interest rates policies. What is going to stop them from monetizing 100% of government debt, aka helicopter money? No income tax is needed anymore. Japan is well on its way to this monetary hell. How much longer will this madness go on, and what will be the end game in your opinion?
Good question, Chris. I think we can watch it develop in the financial markets. It's a boom, or sort of an unwinding boom with a vigorous leg recently. And you've had, since the calamity going into January on credit spreads, terrific narrowing. I mean, and it's still going. This is remarkable because often you can have the seasonal narrowing of credit spreads reverse in June and turn to widening. And this worked very well for us last year, but it hasn't turned yet. But I don't care how intrusive they've been, and let's face it, since the Fed was formed, they've been intrusive. And you always get the change in the yield curve, credit spreads. So that has yet to be accomplished. And the other one that you get is the flattening of the yield curve. That's the difference between long-dated and short-dated bonds. And we've had the flattening on. Now, in certain kinds of big booms, like in 2007 and 2000, you actually did have inversion where short rates got above long rates, and that is a classic. But also in looking at the yield curve since 1850, the U.S., you can have the start of a recession without the curve having been inverted, just turning from flattening to steepening. And I think this is pretty close to starting here now. So you've got the two financial things in the credit markets that the Fed has never been able to influence. When it's time for these things to turn, they turn. So that's spreads and the curves. So we'll watch that. The rest will trade off of that with then weakening commodities and the stock market rolling over. So that's what's going to do it. It'll be market forces will drive asset prices down. Not enough asset prices going up. The Fed can no longer inflate and its portion of the credit, and you're going to end up with a credit contraction. And the public will then take a look at it and say, hey, you guys, it ain't working. We're going to reduce your power. How they do that is going to be interesting, and that's probably subject for another question.
Well, we have a part two to Chris's question as well. He said, is there going to be any way to end this insanity? Does he thinks perhaps the central banks could go bankrupt, and what happens then?
I think they're already bankrupt, but, they're so leveraged. But it'll be market forces will defeat the Feds in their attempt to drive everything up in price. And then the public looks at it and then says we got to have a different kind of central banking, and that's ahead. Well, many of the gold bugs have got this idea that the dollar is going to go to zero. But if you note, for the last number of decades, the dollar down, asset prices up. And asset prices up is good. So what you want to have is not just the change in the credit markets, but the firming up of the U.S. dollar. And then the bad thing is asset prices going down. And then the public looks, and as I've repeated, the central bankers will be severely criticized.
We also have a question from Frank in Belgium, Frank de Bar, a longtime listener to the program. His question, we both know that peak credit cannot be solved by throwing more credit at it, but is it possible that helicopter money alters or even prevents the credit contraction? Yeah,
it's a good question. I think the helicopter money, as a matter of fact, I grabbed an image on it this morning. It's somewhat the equivalent of actual printing of banknotes, currency, and which occurred with the classic example in the Weimar Republic in 1922, 1923. But they were able to do the printing press money there because Germany had virtually had zero credit markets. So in order to do the printing press, i.e., the helicopter money, which is basically going to be electronic money, credit sheet, balance sheet stuff, in the U.S., you've got the biggest credit market in the world, and you'd have to destroy that. And the bond vigilantes are not on duty these days when you've got yields down to unprecedentedly low levels. So, again, it'll be changes in the credit markets that will prevent the Fed from further helicopter flights. I'm looking forward to it. Thanks for the question.
Bob, thank you so much for chatting with us.
Yeah, good to be with you, Jim, and we'll look forward to next week.
Have a great weekend.
You do.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. You can forward questions for Bob to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.